All right, coming back to Morning Trade Live, it's time for the big picture. Let's welcome in Cooper Howard, Director and Fixed Income Strategist, Schwab Center for Financial Research. Okay, we've got these credit concerns creeping back into the market, sort of giving us flashbacks of 2023. How are you reading into this, Cooper?
Yeah, if you look at it through the eyes of the fixed income market, Sam, it's been a move down in yields. We saw that yesterday. We're seeing a little bit of a recovery in the 10-year today, but it is still below 4%. So that's the lowest that it's been in quite some time. So our view right now is that it wouldn't be too unlikely to see the 10-year treasury trade in a range bound moving sideways. So this looks to potentially be the lower end of that range. Now, maybe it could potentially move lower, but I do think that there's a little bit of a psychological behavior or psychological effect at that 4% level.
Yeah, absolutely. Okay, so as far as what's next, as far as a catalyst is concerned, we're hoping to get the CPI print on the 24th, so next week, ahead of the Fed's meeting. How could that move the needle? I mean, do you anticipate to see a move in the Treasury market?
Yeah, I think that's a great question. And going back to the side of the point that you made about what's the next catalyst, really we're not seeing any catalysts in the fixed income market, and that's really related to the government shutdown. We're not getting that flow of data that we originally expected, Sam. You did mention that we're going to get the CPI data out next week or out on the 24th. So I do think that that's going to be something that is definitely going to be worth watching, and the market's really going to be heightened and focused on that because it's one of the few pieces of information that we're going to be receiving. Now, we'll see if it's a fully complete report. I think that there's some debate and some questions about how full it's going to be and if it's kind of a lens into everything that's going on. Do I necessarily think that it's going to sway what the Fed's probably going to do in the near term? Probably not. But you could see some volatility on longer term bonds because of it, potentially because it is the only report or the only major report that we've received in quite some time.
Yes, it certainly has been. And in the absence of all the data, obviously we've been hanging on to every word of this sort of Fed speak, particularly this week. It was interesting yesterday listening to Myron sort of calling for a half a point hike, sort of more cut, and then Waller with a sort of more conservative outlook there of a quarter point. Just wondering, as you read into some of the commentary, I suppose it's no surprise that we're looking at a divided Fed. But how have you been sort of digesting all these comments that we've been getting from these various speakers as we approach that meeting, as you say, with a lack of data?
Yeah, our expectation is that they are going to cut this month, even though there has been that lack of data, Sam. It does appear as though they kind of want to make a insurance cut, if you will, to stave off further deterioration in the labor market. If you listen to a lot of the Fed commentary, they have been very focused on on the labor market and potential slowdown there. Obviously, we didn't get the non-farm payroll or the employment situation report. We did get ADP. We know that's from a couple weeks ago. It did show a softening in the labor market. So I think if you look at that, the trend is important to show the decline in it. But going back to your original question of kind of how do you navigate through these cross currents or differing views of different Fed officials, and what we like to look at is you've got to kind of take them all with a different a different weight factor or a different level of analysis to them. So we do think that, again, the bias is towards cutting interest rates, and they're likely to cut this month. Now, looking at Stephen Myron, for example, we know that he was that lone dot all the way at the bottom of the dots plot. So he's been very vocal about a more aggressive rate cutting strategy. So do I think that that's the way that other Fed officials are going to go? Probably not.
Okay, it's all about that risk management, isn't it, Cooper, as you mentioned. Thanks so much for joining us on this Friday. Have a fantastic weekend. We'll catch you later. Cooper Howard, Director and Fixed Income Strategist, Schwab Center for Financial Research.